Okay, I think do have Mr. Rana Kapoor from Yes Bank as well. So, Mr. Kapoor, to you first, pleasant surprise. I've heard a lot of bankers in chorus speak about the need for a rate cut. Has it come in slightly earlier than anticipated?
I think this is a very positive development. It's a very timely step by the Reserve Bank of India. Most people were expecting this to happen in any case on February 3rd. But I think a decision now sends a very good message that there is emphasis on strengthening economic growth, of building economic momentum, and that inflation has been harnessed and it's well within control. So it's a very good message on January 15th.
Mr. Kapoor, morning. Does this also bring about and change the investment in the country right now? Because investment was a key concern and a lot of people were debating that even if there is a rate cut, it's not going to really help pick up in investment. Do you think that would change?
No, I couldn't agree with you more because, this is going to create a mood swing. Because there is, as you know, a lot of business confidence. The conviction in the economy has grown steadily. And I think the interest rate shift, the pendulum moving towards rate reduction is a very important catalyst in the system. And this will start enabling growth and convert the positive energy, into actions. And naturally, industry is going to be significantly relieved because they have been challenged by high interest rates. They have been challenged by low demand. And this, to me, is a coupling effect of an improving economy, of improving conditions, and naturally steady restoration of the investment and capital formation cycle, which has been stagnating up to now.
Mr. Kapoor, aside of the fact that he may do it one more time in the next 3 months or so, whatever, but the point is that this is a clear signal from the Reserve Bank that he is willing to act if indeed the print is lower, and if indeed the print continues to be lower, we might well see the rate cuts coming in. We may keep on dabbling about the timing and when it could happen, but this is a clear signal that the rates are on their way downwards in calendar year 2015.
Yes, because the governor himself has stated that the consumer price inflation target of 6% for January 2016 has fullest visibility, and he is extremely confident that that target will be more than achieved. So I quite agree with you that this is a baby step, but a very important stepping stone to cycle, and I'm sure frequent rate reductions over the next 12 to 15 months, at least till March 2016.
Just finally, before we let you go, Mr. Kapoor, what does this do to credit offtake from banks? Because rates were anyway low in the system, but somehow the credit offtake was not happening. Can this really lead to a credit offtake, or will we need more rate cuts for the same to happen?
You see, credit offtake, as you correctly point out, has been sluggish. I think the 25 basis points is a demonstration of, an improving interest rate environment. So as the confidence with the bankers starts, building up, naturally bank rates will come down, deposit rates will come down, and that in itself is going to be self-fulfilling and getting credit growth going. I do expect that this year, 15-16 around the corner, we should see credit growth coming back to a level of around 16% or so.
Arundhati, ultimately the rate that you charge to your borrowers is a function of the cost of deposits for you, your cost of funds. How much does a cut in the repo rate really affect your cost of funds?
Actually, it doesn't really affect us very much, not especially now when there is so much of liquidity. We don't really borrow in the repo market all that much, and it is mainly the deposit rates that determine the rates at which we can give the loans. But anticipating that, as you know, we have been slowly reducing our deposit rates from October, and we have been adjusting that as well. So to that extent, it is a fact that given the kind of numbers that we are seeing and the weakening of the inflation that we were seeing, we have been sort of factoring in the fact that the rates will need to come down within a specified period of time.
Oh yes, certainly you have been cutting your deposit rates, but I think what borrowers are looking for really is a cut in your lending rates. When can we expect to see that?
Let me see. We will have an ALCO very shortly, and then we will determine how and when we can do this. As you know, the credit growth is very poor at this point of time. It's probably at a 15-year low for our bank. And that is definitely a factor that we have to keep in mind. Also, given the fact that the NPL pressure is still not fully over, there is a maturing of NPAs. As a result, there are requirements to make more and more provisions. So all of these also need to be kept in mind for us. And only after looking at all of this can we determine when and how we can, and by how much we can bring down the lending rates.
Oh, absolutely. It's a tough call. But do you think the cut in interest rates, if and when you do it, will significantly affect your non-performing assets? Will some of them start performing?
See, a 25 basis points cut is not really all that much. But what it does is it does indicate that we are re-entering a growth cycle. So to that extent, it is something that helps in sentiment. And definitely going forward, we should see better economic activity. So to that extent, I think it will definitely help in in the working of those assets which currently are working at lower levels.
And how much of a gain in the treasury income will you be sitting on? With State Bank of India, I think you were holding excess SLR. The cut will be a big boost for your profit lines, if I can think of it.
Yes, that is of course the case. But as you know, we have to work out how much is available for sale. We can move certain items into the AFS only at a particular time of the year. So yes, we will be checking out how much we can make there. As you know, the yields had already come down even before the repo rate cut. Now they have fallen a little further. So we have to see how it works out.
And do you anticipate any increase in term loans as far as infrastructure projects are concerned? Will banks and borrowers look at infrastructure projects with a little less jaundiced eye than in the past?
That all depends what is the kind of the project, whether they come with all the approvals in place, whether the land acquisition has been done. So I don't think the rate cut is something that will directly affect those infrastructure projects. What will affect the infrastructure projects is if they are done on better lines than we did in the earlier round. So let's see how it works out.
We've seen the Nifty react very strongly. Is that going to be warranted? Will it make it easier for banks if they want to kind of tap into the market? Because we are expecting PSUs to raise a large amount of funds from the market. So will this change the outlook of the market on public sector banks?
It will change the outlook on the banking sector per se. I don't think this is anything particularly to do with public sector or the private sector. If you've seen the rise of stock prices, it's risen across the board. I think it's risen equivalently for the public as well as the private. But definitely it will be positive for the sector.
And as far as deposit mobilization is concerned, as and when you do cut rates further in response to the repo rate cut, do you see deposit rates growth slowing down at all?
Deposit rates will come down. Deposit rates also will come down. When inflation is so low, the real rate of interest is much higher. So that will definitely come down.
And what will that mean in terms of net interest margins?
Very difficult to predict at this point of time, but I'm sure all banks will try to hold their NIMs where it is. However, the deposit rate cuts normally, it factors in over a period of time, whereas the cuts on your base rate side will factor in on the very first day. So I'm sure all banks will look to see how they can balance all of this.
And how much of an impact do you think all this is going to have on economic growth?
Economic growth at 25 basis points, I don't think has a very big impact. But what it does is it signals a weakening of the rate cycle or a turning of the rate cycle. And I think that signal is very important for economic growth.
We've also seen a strengthening of the rupee. Now, will the strengthening of the rupee hurt our export performance?
Yes, if the rupee strengthens over and above all other emerging market currencies, it will hurt the export market, which is why if you've seen in the last 2 months or last 1.5 months, the rupee has weakened. And that has been good for our exporters. Otherwise, obviously, they'll get priced out of the market.
The RBI has been telling banks as well as corporates that rupee volatility is here to stay and has been encouraging them to hedge. As far as your customers are concerned, are you seeing a greater learning from the corporates? Are they hedging more, or are they still assuming that everything is hunky-dory?
No, I think they are hedging more. They may not be hedging the entire period, but they are definitely hedging at least 1 to 3 years forward. That much they are doing, and we are also recommending that be so. We are pushing them towards it. definitely there is more awareness of the fact that there will be a lot of volatility in the rupee.
And what do you see going forward? Do you see the RBI continuing with rate cuts? Because they had said that once the monetary policy stance changes, their action will be consistent in that direction. So can we hope for more rate cuts?
I should think so. If this disinflationary pressures remain, then definitely we should be seeing more rate cuts.
And what do you think as far as your customers are concerned, particularly as far as the depositors, what is the minimum real rate of interest that you think they require to put their money in banks?
See, there is nothing called what is the minimum they require. They should get as much as can be given. And there are times also when they don't get any real rate of interest. So, you can't really say that your 1% is fine or 3% is fine. But as I said, we will need to see how much it will affect the margins and then adjust the rates accordingly.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.